If every country on Earth owes money, who exactly do they owe it to? It's one of the strangest paradoxes in modern finance. The United States owes trillions, so do China, the European Union, Japan, even tiny island nations. Everyone's deep in the red. Yet somehow, the world keeps spinning, the markets keep rising, and the creditor behind it all remains invisible. Is it another country? A hidden elite? A global institution? Or is the answer buried deep within the structure of money itself? Because what if, and stay with me here, the debt isn't owed to someone else, but to the system itself, a machine that feeds on the very belief that money must always be borrowed, never owned. Let's start with a fact that sounds impossible. As of 2025, the world's total debt has surpassed $315 trillion, roughly 3 times larger than the entire global economy. Every country, government, business, and household combined owe more than the planet could ever produce in a single year. So, again, if everyone is in debt, who's the creditor? At first glance, the answer seems simple. Countries owe each other. The US owes China. China owes Japan. Japan owes its own citizens. But when you trace the financial chain far enough, the lines start looping back. China's surplus is parked in US Treasury bonds. The US borrows from investors using dollars that the Federal Reserve creates. And the Fed, it creates money by issuing more debt. The cycle becomes circular, like owing money to a mirror reflection. This isn't a glitch. It's how the system was designed. To understand this loop, we have to go back, way back to the birth of modern money. For most of human history, money represented something real. Gold, silver, grain, land. When kings ran out of treasure, they stopped spending. Debt had limits. But in 1694, something revolutionary and dangerous was created. The Bank of England, the world's first central bank. It didn't lend gold from its vaults. It created credit out of thin air by issuing paper notes backed by the government's promise to repay with interest. In short, the government went into debt to borrow money that didn't exist until the moment it was borrowed. It worked brilliantly. England financed wars, trade, and empire building on money it conjured from faith in repayment. Other nations copied the model. France, the Netherlands, and eventually, the young United States. By the 20th century, debt-based money had replaced gold as the bloodstream of the global economy. But the real turning point came in 1971, when President Richard Nixon made a single announcement that shattered centuries of financial tradition. It closed the gold window, ending the US dollar's convertibility to gold. Overnight, money became a pure idea, backed not by metal, but by government decree. From that moment on, all money became debt. Once money itself became debt, the global economy transformed. Central banks discovered that they could create infinite liquidity simply by adjusting interest rates and printing reserves. Politicians realized they could spend beyond their means without immediate consequence. Investors learned that debt wasn't a burden. It was fuel. Through the 1980s and 1990s, the world entered a golden age of leverage. Countries borrowed to build infrastructure, corporations borrowed to buy back stocks, and consumers borrowed to buy homes and cars. The IMF and World Bank encouraged developing nations to take massive loans in dollars, promising modernization and growth. And at the center of it all sat the US Treasury bond, the safest asset on Earth, the foundation of every pension fund, every bank reserve, every currency exchange. Governments, corporations, and investors all needed treasuries. And to create more treasuries, the US needed to borrow more. So paradoxically, the world demanded more US debt. Debt wasn't a flaw anymore. It was the product. But every system built on belief eventually tests its limits. The first cracks appeared in 2008. The global financial crisis exposed that many assets were simply layered debts pretending to be wealth. Trillions vanished overnight. Central banks panicked and responded by doing the only thing they could, creating even more debt. Through quantitative easing, they bought their own government bonds, injecting trillions of newly created dollars, euros, and yen into the markets. The result? Stock markets soared. Real estate boomed. billionaires multiplied. But the real economy, wages, savings, and productivity, stagnated. Debt had replaced value, and the gap between those who could access credit and those who couldn't became a chasm. By the 2020s, the cycle reached absurdity. Countries borrowed to pay off old loans. Central banks bought their own government's debt, and financial markets hit record highs, not because of profits or productivity, but because of belief. Belief that debt would always be rolled over, never repaid. So, who is the creditor in this endless web of borrowing? The uncomfortable truth: there isn't one. In the modern financial system, the creditor is the future itself. Every loan assumes tomorrow's labor, taxes, and growth will be enough to pay today's promises. Governments borrow from their citizens' unborn productivity. Banks borrow from tomorrow's interest payments. Central banks borrow from tomorrow's stability. The creditor is a ghost, a projection of faith that the system will keep expanding forever. But what happens when the future stops growing fast enough to cover the interest? We're already seeing the warning signs. Global debt is growing faster than GDP in nearly every country. Entire generations are locked out of housing because asset prices are inflated by debt. Nations are trapped, unable to raise rates without crashing, unable to print without inflating. And yet, we're told it's normal. Governments have tried everything: austerity, stimulus, tax reform, digital currencies. But the debt only grows. That's because every solution assumes the same premise: that debt must exist for money to circulate. The International Monetary Fund lends to struggling nations, using funds borrowed from other nations. Central banks issue emergency liquidity by buying their own government's debt. Even debt forgiveness gets financed through more debt. It's a self-sustaining illusion, a snake eating its tail. The only constant is that someone, somewhere, must always owe. Because the moment debt stops growing, the system collapses. Look at the numbers. The U.S. national debt is topped $35 trillion, growing by $1 trillion every 100 days. Japan's debt-to-GDP ratio sits at 260%, yet its economy barely grows. Developing countries now owe over $100 trillion combined, with much of it denominated in foreign currencies they can't print. Meanwhile, the global financial system depends on this debt for everything, from bank collateral to pension valuations to currency exchange rates. Remove debt, and money itself disappears. The pattern repeats across centuries, from the Roman Empire debasing silver coins, to medieval kings borrowing from bankers, to 21st century central banks creating digital reserves. Every empire rises on debt, expands on debt, and collapses under it. So, let's return to the question: if every country is in debt, who's the creditor? The answer isn't a nation, a billionaire, or a secret cabal. It's the system itself, a self-referential machine that forces growth through perpetual borrowing, where tomorrow is always mortgaged to pay for today. Here are 3 takeaways. Debt is not the opposite of money. It is money. Every dollar, euro, or yen in circulation began as someone's IOU. The creditor is the collective belief in tomorrow's repayment. Without faith in the future, the system freezes. The cycle can't go on forever. History shows that when debt outpaces real value for too long, correction follows through inflation, default, or and that's the warning. The next global shift won't be about who owes what, but what money even means. Will it be central bank digital currencies, a return to commodity backing, or something entirely new? A post-debt economy. Whatever happens, one thing is certain: understanding the illusion is the first step to seeing through it. So, the next time you hear that the world is in debt, remember, the debt isn't just on balance sheets. It's in the architecture of belief itself. If you found this breakdown revealing, hit like, subscribe, and share this video with someone who still thinks debt is just numbers on a screen. Because until we question who really owns the world's money, we'll never understand who truly holds its power.